Hello, everyone, and welcome to our Money Matters event for this evening. We are so excited to have you joining us for the topic that we will be sharing tonight, which is all about borrowing. So while we give everyone some time to get logged in and settled for today's event, I'm going to go over some Zoom housekeeping tips to make sure that we are all on the same page so we can have a smooth event together. First, we do ask you to please make sure that your Zoom profile shows us your first and last name, as well as your pronouns if you wish. This helps us not only get to know you a little bit better, but also be able to grant proper attendance credit where it is due, so that afterwards, when you finish this event, we can send you your certificate of completion. And if you attended all 3 events this semester, you can be entered in a drawing to win our ultimate prize. But more details about that in a little bit. Also, please be aware that this event is being recorded for educational and promotional purposes, so that if folks weren't able to join us for the live event, they can still watch and learn from all of the great information in replay on our YouTube page. Also, it'll be a great tool for you to be able to reference back and watch and learn for a recap or a refresher if needed. And so those recordings will be available on our YouTube account at Pima Students Engagement under the Money Matters playlist. More information and a reminder about that will be shared later during the event. Please also be aware that captions are available if that would help you with learning and being able to follow along. If you would like to have those on your screen, just go down to the bottom of your Zoom toolbar, click on those 3 little dots that say More, and then select the option to show subtitles. We do ask everyone to please keep your microphones muted unless you are the one who is speaking. This helps us be able to easily hear the speaker at hand. We get it, things happen, all of a sudden somebody comes walking into the room trying to talk to you, or if you're at home, all of a sudden the dog starts barking in the background. You can't control those things, but what you can control is that mute button. However, we want this to be a place where you can get your questions answered. And I'm sure there's going to be a lot of great questions that come to mind with the topic at hand. And so at any point throughout tonight's event, please go to the Zoom chat box and type in those questions, and we will field them all throughout the event. And if it's not something that we can immediately answer in chat, we will add it into our queue, and there will be a specified time for Q&A later at the end with our subject matter expert in this topic. In addition to wanting this to be a fun space where we get your questions answered, we also ask for it to be a safe space. So please make sure that you keep all conversation respectful, clean, and civil. And we thank you for that. Also, later on at the end of this event, we will share with you the link to this feedback survey, and that is going to be how we record that you were present for the entire event and that you are eligible for that certificate of completion. That's a great way for you to add to your resume or your co-curricular transcript, documentation of all of the additional learning activities you were involved with at Pima. And also it's a great way for you to show your instructors in case they are offering extra credit for participating in tonight's event. Again, we will share more information about that later, but just as a quick reminder, you do need to be present for tonight's entire event in order to get access to that feedback survey, which will then get you your certificate of completion. Now, there will also be 2 opportunities for you to win prizes just by following us on our social media account. So tonight's activity is brought to you by Pima's First Year Experience Program. And to follow us on our social media accounts, you'll just look for the handle at Pima FYE on Instagram, Facebook, and Twitter. For convenience, we'll also be sharing the links to that in chat for you. And then tonight's event is also brought to you by Pima's Financial Aid and Scholarships Office. So to follow their social media accounts on Instagram, you're going to look for the handle at pima.financialaid.scholarships. We're going to be checking our accounts later on during the event, and we will be selecting 2 winners, one who follows each account. So if you follow both, you've got double entries and possibilities of winning our drawing prizes. And we will announce those drawing winners later at the end of tonight's activity. And also, again, as a reminder, because we're so excited about this opportunity, if you attended all 3 Money Matters events for the spring semester, then you will be entered and eligible to win a $250 tuition award, which can be used towards the spring 2022 balance. And we've got some more information about that as well. But that's even more reason to make sure that you hang with us till the very end at 6 o'clock when the session will end. And then in a few weeks, we will host that live drawing and share the winner out later on those social media pages. So another reason to make sure that you follow us. As mentioned, tonight's opportunity has been made possible because of the team planning, and it was a team effort. And so I want to go ahead and share the mic to bring to you the attention and introduce everyone who helped make Money Matters possible. So we will start with Carla.
Hi, good afternoon, everyone. It's great to be here. Welcome to Money Matters, our last session for this semester. My name is Carla Gonzalez. I'm the Assistant Director of Scholarships and Outreach. My pronouns are she, her, and hers. And I'm the person that helps students with financial aid questions, scholarships, and I work alongside my colleague, Juanita.
Hello, my name is Juanita Bonillas, and I work with Carla in the Office of Scholarships and Outreach. We're happy to have you here. Thank you.
And for those of you who I have not yet met, my name is Renee Forsyth. I use she, her, and hers pronouns, and I lead the first year experience program at Pima. And our whole mission is to get new students connected with specially designed events and programs so that they can start with great momentum and motivation to carry them on through till their goals and graduation. We also are so pleased and excited to be partnering with One AZ Credit Union, and we have a fantastic subject matter expert who has helped us plan all of these Money Matters events. Patrick, would you please introduce yourself?
Thank you very much. Yes, my name is Patrick, for those of you who don't know. I'm with One AZ Credit Union. I've been with them for well over 9 months now. I started off as the workplace banking, regional workplace banking manager, and then of course just recently promoted to the branch manager over the Oracle office there on Oracle and Orange Grove, if you will. And the fun fact, I actually went to Pima as well and graduated from Pima. So my skills are going to be tested today.
We always love to brag and boast about our alumni.
Right. But other than that, well, let's get to it.
Yeah, so we have an intro video to show you, which is going to give a brief introduction about the topic of debt and borrowing, which Patrick will then go into more detail about. So to get things started, let's show this video.
A minute to learn it. Debt and borrowing money. Here are 5 key points to know about debt and borrowing money. 1. Debt is money you borrow and agree to pay back. You will be charged interest, a percentage of the money borrowed. 2. Loans are a type of debt with an agreement to repay the amount borrowed over a specified amount of time. A cosigner is someone who agrees to repay the loan if you aren't able to. 3. Understand different types of loans. Research and know the terms of the loan. 4. Know your debt limit. Determine your personal debt limit based on your income or potential income after completion of your program. 5. Review loan repayment and consolidation options. Research and determine which will work best for your financial situation.
All right, so without further ado, I'm going to pass the mic over to Patrick so he can tell us everything we need to know about this special topic.
Right. Let's see here. Going. Able to see my screen?
Not yet. There it goes.
Now we can.
All right, so we're going to talk about borrowing. Essentially, we did the introduction here as well, so let's get to it. So, of course, with One AZ, we do have about 150 members, as well as servicing the Tucson and the southern region for well over 70 years. So anyways, let's dive into it here. So essentially, a lot of people ask themselves, how does credit really work, or how does credit cards work? That's a question that many people ask. And like yourself, when I was in college, I was also asking the same question. I didn't really have any direction as far as, how to utilize a credit card, but I did have people when I was at the Pima campus where, institutions such as, Bank of America came along and they were offering those credit cards. And again, the question still lies, how does it work, right? So the other questions that came about were, when it comes to borrowing, is how does mortgage work? How do credit car loans work? And how do student loans work? All these questions can be overwhelming. So with this topic here, we're going to go ahead and dive in, and we'll start off with the credit card first. So a credit card is usually an unsecured debt. It usually has a high interest rate, and of course, it is a revolving product. So what that means is, once you use it, you can always pay it off and then use it again, right? But with that, if you keep that balance on there and it keeps revolving, there's also what we call interest that's going to be accruing at the same time. So it's very important to understand the aspect of it. There's also a credit card where it's a secured credit card. Most institutions offer those, where you just give a minimum of 300, maybe 200, depending on the institution, and then they'll give you a credit card with that line of the amount that you secured it with. So again, the same principle still remains, where you use it, as long as you use it, accordingly, then you'll be fine. But of course, a lot of people fall into that trap where you use it, you max it out, and it starts hurting you at that point. All right. So when you swipe the card, essentially the way it works is the bank will pay for whatever product that you're purchasing. A lot of people use Amazon. So you use it on Amazon, you get your product, it comes to your door, the bank pays for it, right? And that would be, Amazon would be the merchant in this case. So when you swipe the card and you use it, you're going to have to pay back that money, right? So you pay the bank, and of course, they're going to be requesting interest on top of that, which accrues on a daily basis, of course. And then once they bill it to you, you have to pay that on top of what you paid was with the minimum, and of course, the principal added into that as well. All right. So the credit card timeline. We're going to go ahead and take a look at a diagram here, which will give us a breakdown of how it really works. So let's say January 1st, you have your card, it's zero balance. And then on the 10th, you go ahead and you purchase $1,000 worth of goods on Amazon, right? January 31st is going to be the end, the billing period statement will be received. And then, of course, you'll be expected to pay for, the goods that you got. So February 1st, the balance, of course, on your statement would be $1,000. And then, of course, February 7th, you go ahead and you make another purchase. The balance that you have to pay, for the previous month would still be $1,000. Now, a lot of people will have, whether it be a minimum payment due, so they go ahead and pay just the minimum and then they revolve the difference. But when you make a purchase on the 7th, you're going to have the balance that was left over plus the $500 there that you purchased as far as the goods on that card. On February 26th, the due date, of course, the cycle closes as well. You're expected to pay that balance, the $1,000 balance in full, so that way you can avoid that interest. However, again, in the real world, we tend to kind of roll it over. So in this case, for the sake of argument, we're paying it off in full. We have now $500 left over for the next billing period. Right? So the end of the billing period, the statement is received, and of course, again, it comes back, the balance being $500. And then on March 24th, which is the due date, you have to pay that $500. Right? Now, with the credit card, the one thing you got to understand is that it also impacts your score, your credit score, your FICO score, if you will. So if you have a balance that's rolling over and you don't pay in full, that's going to be reported, right? And let's just say you only have $1,000 as your credit limit. Then at that point, you're looking at 100% utilization. and that hurts you. So with that said, you want to make sure that you use it accordingly by keeping the balance low, which is usually ideally you want to keep it around 30% utilization, right? So you want to look at what 30% is for $1,000, and that's what you want to have at least used on that card, so that way it doesn't hurt you. The other thing too is the due date is very important. You want to make sure that you don't miss any payments. So if anything, if all you can afford is the minimum due, then go ahead and by all means just pay the minimum due. And then remember, there's a grace period in between of about, I believe, 5 days from the due date, where once you come up with that money to pay it off in full, then you go ahead and pay it off in full before the statement closes. Then at that point, it's going to report a zero, balance, which is good for you in that case, because then it's showing that you're not utilizing it, over utilizing it, if you will, which helps with your points when it comes to that. All right. So the grace period, as we spoke about, is very important. So you want to make sure you remember what the due date is and the statement closing date, so that way you can pay that balance off at least by that date. So that way you're covered and your score doesn't get damaged, if you will. Right. So the minimum payment for most organizations is calculated differently. So for instance, let's say, just for the sake of argument, we'll say Citibank. They have their credit cards and their minimum payment due is calculated by 1.5, at least from the last time I remember, right? So it would be 1.5 of the balance plus any fees that are accrued. Let's just say a late fee or whatever the case may be, or interest, that would be added into that minimum. And then it goes and covers first the fees, the interest, and then whatever else is left would then go to the principal balance at that point. So in this case, for a $1,500 balance, you're looking at a $30 minimum payment at a 2% of the balance in this case. Right. So avoid the minimum payment. This cannot be stressed enough. If you can help it, in a sense, you want to make sure that you spend only what you can afford. Or, for instance, if you use the credit card as a tool, you use it for gas, right? You want to make sure that you have that money in your checking account before you go ahead and spend that money. So that way you use it as a tool that it is, as opposed to, a card that you use for every expense to live your daily life, if you will. So this example here is going to give you a $5,000 balance, and then of course the interest rate of 19.99, which is pretty high, and then of course a minimum payment of $100. So time to pay it off would be 8 years and 4 months if you're only paying the minimum payment. But if you look at the amount of interest you pay over time is $4,985. That's a lot of money that I'd rather have in my bank account. I'm not sure about you, but I'd rather have that in my bank account. Or if you were part of the event that we had previously, you'd want to invest that money so that way it works for you. All right, so credit card facts. So basically 70% of adults have at least one credit card, and 57% of college students have at least one credit card. And basically, as far as the United States or America in general, we're looking at 910 billion in credit card debt. So it's definitely a huge business, whether it be collecting on that interest or collecting on that on late fees or whatever the case may be. But it's definitely a big business, so don't fall into that trap. Right? So the average credit card per person is about $5,000 or $5,668, if you will. But that's just average. But there's a lot of people that would call when I was on phones taking calls, for credit cards, if you will. People calling in with 10,000, 20,000, you name it, I've seen it, and it's definitely something that you don't want to take lightly. All right, so can you safely get a credit card? Absolutely. If you have a great, score, FICO score, you can definitely get any credit card from any institution. But it's very important that you do your due diligence and do your research as far as which organizations you go for, And then, of course, you look for the best interest rate there is out there. Now, with credit unions specifically, we credit unions, and I mean every credit union in general, they usually have very low rates when it comes to credit cards. At least for us, we have pretty low rates. And then, of course, with our credit cards, there's no annual fee, and then there's no balance transfer fee. So other credit cards, as far as the large institutions, they'll charge you a fee for a balance transfer. They'll charge you a fee for even having the card. So it's very important that you look into the right institutions to help you with your credit card needs. All right, so let's dive into mortgage loans. Again, this is, of course, another hot topic, especially right now. There's seemingly a shortage of homes, but the rates are pretty low when it comes to that. I do remember they were a subpar 2%, but now they're kind of rising. So we can definitely see a difference there as far as things changing, if you will. It is a secured debt, so basically it's secured by the home that you purchase. And then, of course, an amortized loan schedule, if you will. And then, of course, there's two options, where it be 15-year mortgage or a 30-year fixed rate loan. So basically, those are things that you want to do your due diligence before you actually purchase, or before you even start looking into purchasing. You want to make sure that you're not buying too much home, if you will. So that way you're not stuck in a home that you can't afford, and then you get foreclosed or something like that, right? So the down payment varies. So essentially, with the institution that whoever your lender is, when it comes to it, they'll let you know that there's different types of loans. So there's the FHA loan, which starts at 3.5% down. And then there's the conventional loan that can range from 20% down. And then, of course, the VA loan, which is 0% down. If you are a veteran, I would definitely recommend looking into that if you're looking to purchase. Okay. So the amortized schedule would be principal plus interest, which would be equal to the fixed monthly payment there for you. And again, that's something that you want to make sure you ask your broker or your realtor to make sure they give you all the right information. All right, so we have an example here. So the loan amount, let's say, for example, $350,000 with an APR of 4%. The term, which would be 30 years. The monthly payment you'd be looking at is $1,671. But again, there's the illustration here where if it's a 15-year or a 30-year, you're looking at 504 going to the principal, whereas most of it, the interest will be going to cover the interest, if you will, from that $1,671 payment. And then, of course, the monthly payment on a 15, where you'd be looking at pretty much the same as you go along, rather, not the 15, but as you go along making the payments, we're looking at payment number 360, your payment, more of your payment will be going towards the principal rather than the interest. And basically, that's the illustration on this particular example. You can definitely see, but if you cut it down to where you make bi-weekly payments, that can also help when it comes to how much interest you pay in the long run. So we'll go ahead and look into that as well. So this graph here pretty much shows you how it all works. As far as at the very beginning, you will see that you're paying more in interest, but as you go along over the years, you will see that you're paying less and less interest, and then more principal is being paid towards the loan. Which is why most people say, "Oh, refinance." Sometimes you probably don't want to when you're too far into the loan, where you don't want to kind of start over that interest all over again. So, but if you're at the very beginning of your loan, yes, by all means, if you want to kind of lower your payment, I'd definitely say go ahead and do it. Okay. So 30-year versus 15-year. So your monthly payment goes from $1,671 with the 30-year, and then with the 15, you'll be looking at $2,502. So that's an additional $831 per month. But again, with the 15-year, you'd be saving well over $150,000 in interest altogether. So it's definitely important to do your due diligence again to make sure that you're making the right decision. All right, so let's dive into auto loans. And this is also a hot topic because a lot of people definitely spend a lot on cars, myself included. I've had several, and it's one of those things where it's a bad habit for me. I always want the next car, right? So you got to hold on to what you have. As long as it takes you from point A to point B, then stick with it. So it is a secured debt, and it's an installment loan. And then, of course, the rates range from 36 to 84 months, depending on what you're looking for and what you can afford. Then the term would definitely be very important in that aspect. All right. So principal and interest. This one here we can go ahead and skip. But the whole idea is that when you first begin with a list auto loan at the very beginning of your loan, when you purchase it, you'll be paying mostly is the interest. And then, of course, once you get to the middle of the loan, midway, then it kind of evens out a little bit. So you're paying a little bit less interest and then, of course, more principal. And then, of course, at the end, then you'd be paying a little bit less and more principal. So basically, most of your payment is going towards that principal than it is the interest. So it's important to kind of either pay a little bit more if you can, other than just the minimum, pay a little bit more out of pocket and just save on that interest. Or you can pretty much cut the payment down in half and then pay bi-weekly. That'll also help you as well. All right. So with interest, it basically accrues daily. So you essentially want to make sure you pay on time. If you pay on time, you pay the exact interest. If you pay early, you pay a little bit less interest. And then, of course, if you pay late, you're going to be paying a lot more. Or if you basically call, like myself, I've done this before where I've called my creditor, if you will, and tell them, hey, can you push this payment back, right? By doing that, you're pretty much adding more interest in that regard. So basically, it'll take you that much longer to pay it off because they're adding that interest on top of that. Or if you refinance it, that's also another way where it starts over with that interest again, depending on the balance of the balance of the auto loan, if you will. So you want to make sure you're strategic on how you go about making certain moves when it comes to loans. You want to know when to actually do it and when it makes sense, if you will. At the beginning of the loan, sure. Midway, almost at the end, I probably wouldn't do it. I'd just stick with it and just keep making those payments. And then personal loans. Personal loans are unsecured. There's no product backing them. It's just one of those things where you can go to any institution that give you a loan based off of your credit worthiness, of course. They usually have a higher interest rate, and you can use them for pretty much anything. So we did talk about credit cards. There are some credit cards that allow you to get somewhat of a loan, if you will. It's called a balance transfer. So you'd be able to get money from that credit card and transfer it into your checking or your savings account. And of course, you'd be looking at the interest rate and the terms that they give you for that. Or you can go with a personal loan where you just get that with no collateral whatsoever, but the interest rates are high. Right? So let's go ahead and dive into this a little more. All right, so there are other types of loans. There's payday loans. Again, guilty. I've done those before, but again, that's life. Life happens, and there's times when you just have no other recourse but to, go for such loans. But if you can help it, stay away from them because they're very high in interest, and it takes a while to either pay them off, if you will, and it can get messy. Right? Then there's title loans, which are short-term loans, auto title or collateral loans. But if you look at the amount of interest, you're looking at 2.4% APR. And these are actually, at least payday loans are illegal in Arizona anyway. But if you had to go for that, then just know that you'd be paying a much higher interest rate as opposed to balance transfer with a credit card if you can help it, if you can do that. Then the student loans. This one does hit home because I'm actually back in school. So I went ahead for the first time and got a student loan. It is an unsecured debt. Federally, it's a federal loan. And of course, there's also the private loans. But let's dig into this as far as the differences. So it's backed by, it's federally backed. So we have direct subsidized loans, and then direct unsubsidized loans, then direct plus loans, and direct consolidated loan. So the direct, they're basically for undergraduate students with a financial need. And then federally backed, government pays the interest while you're in school, so they're deferred in that aspect. But as far as the interest rate, it's 3.73% for 2022 currently. And then for the direct unsubsidized loans, they're also for the undergraduate and graduate students with no financial need. Federally backed, they're not. So you would have to pay interest on your own, which is 3.73% for undergraduates and 5.28% for graduates. And the direct plus loans, these are for graduate students. Parents of undergrads can also take this loan out to help with the financial need or for education purposes. Federally backed, they're not, and they usually have a high interest rate of 6.28%. Then direct consolidation loans, basically, they allow borrowers to consolidate school loans. So if you have more than one, you can consolidate that, so that way you only pay one payment post-graduation. They're not federally backed, and the average interest of all the loans together is what determines the kind of interest that you pay. Private student loans, after maximizing your federal loans, then you can go ahead and look into that. They're usually hard to qualify for. The interest rates will vary. And then, of course, less flexibility in payment as well. So borrowing and credit score. So this kind of gives you a breakdown of how it all works as far as your score is concerned. You'd be looking at 30% for accounts that you owe, and then of course 10% for new credit, 15% for length of credit history, and then 10% for credit mix, and then the largest one being 35% payment history. So that is why it's very important that you don't miss any payments on any loans. You want to make sure that you either one, have it on auto pay if you can, or you can set up some kind of alert so that way you know that, okay, on this particular day I have to make sure I pay what I need with you, so that way I don't miss any payment. So paying off debt sooner. There's definitely different strategies as far as how you go about doing this. One being the non-mortgage debt. So let's say, for instance, the debt snowball. With this, you essentially want to make sure you get, whether it be a spreadsheet or write it down on a piece of paper, whatever the case may be, write out a budget first, so that way you know how much cash flow you can afford, right? And then with that, you want to go ahead and throw as much as you can from smallest to largest. You write down the smallest debt first, and then you just go ahead and write them down all the way to the largest. And what you will do is you will make sure you pay the minimum on all the other creditors, all the other creditors that you have. You pay the minimum on all those. And then the smallest one, you're going to throw as much as you can towards that, whatever you can afford extra. So you pay the minimum for it plus extra. So that way we can kind of, start that process of the snowball. So once you pay off that small one, then the amount that you pay as far as the minimum for the small one, you take that plus whatever you can throw extra into the second, smallest. Now that's the smallest after that. So the whole idea is basically teaching you the habit of, how to pretty much deal with debt as you go along. And essentially, once you do that, you kind of feel good because now you're racking up those wins, right? You're winning and you're feeling good that you're taking care of business and you just keep on moving, right? So the other one is the debt avalanche. Now, this one I've done before myself, and essentially when I had, of course, the credit cards, and then I had an auto loan. So I had to make sure I wanted to, kind of take care of the biggest one first. The reason for that is because I looked at which one had the most interest, the highest interest rate, if you will. And for me, it was the auto loan. So I wanted to make sure I took care of that as fast as possible. So in this case, it's the largest to smallest, and then you make sure you throw as much as you can towards the largest debt to go ahead and get rid of it, and then minimum on the other small ones. And then you keep on going and just keep building that avalanche, if you will. So that Snowball, it focuses on behavior with money, and again with the budget part of it, it also help teach you the habits of being good with money, or helping you kind of get better with money. And that's something that I myself had to learn the hard way. By using these techniques and tips is definitely something that helped me in the long run. All right, so mortgage debt, which is basically, I feel, is the largest debt you could possibly have in your entire life for most. So I think it's very important that we talk about this as well. So bi-weekly payments is definitely something that can help in this case. So 26 half payments versus 12 full payments. In this case, it will help save you 5 years of mortgage payments and saves over $41,000 in interest. So again, the whole idea is cash flow and making sure that you have more than you're putting out. So 41,000 in interest, I'd rather have that in my account or invest it somewhere working for me. So if you can help it, cutting your payment in half and making those half payments, or even paying a little bit more in that aspect, would definitely help you in the long run. That's definitely something that I would recommend for anybody, even family members, if you will. All right, so a 15-year mortgage, you're looking at, for example, in this case, $350,000 mortgage at 3.5%, 1,671 to 2,502, which is of course an extra 831 a month. So in this case, if you're looking at a 15-year, it's going to increase your payment as far as how much you pay for your mortgage, but you'll be saving a little bit on that interest as well. So it's definitely something you want to look into. Don't buy too much home, buy something you can afford. And of course, that'll help you in the long run. And do's and don'ts of borrowing. So with the do's and don'ts, we're looking at raising your credit score, then borrow. So yes, you can definitely say, hey, Patrick, I want to, borrow this much money, but my credit score is not good. Rather than going ahead and taking that loan or borrowing, and you get, a high interest rate, I'd say work on your credit first. Take care of that. Once you're at a point where you can get a favorable interest rate, then by that at that point go ahead and borrow, if you will. But if you're trying to build, again, there's tools for that, as far as secured loans or whatever the case may be, to kind of help you boost that by making your payments on time, with the secured credit card, by making sure that you're not utilizing too much of your credit. So keeping it around 30% is definitely something that will help you in the long run as well. And that kind of helps boost your score as well. Credit mix is very important. So the other idea is to not just have a credit card, you can have an auto loan, and then of course you can have a personal loan, but having a mix of everything together is definitely going to help boost that score. That's how you'll be able to kind of build your score. Large down payments can improve your rates and lower or even eliminate mortgage insurance. So in this case, what they call PMI. So if you're putting down 20%, that can help with that. But again, don't misunderstand it, because most people would think, oh, okay, well, I can't afford 20%. You can always go and do the 3.5, and you do that. And then, of course, refinance later on down the road. to where you can then eliminate that that interest, that PMI, if you will, once you have enough equity in the home. So shop around for the best rates is also another thing. You want to make sure you reach out to all the institutions and just find out how much or what they can offer you for a specific interest rate or a score, if you will, credit score, and make sure that you're making the right decision. So that way you're not just jumping the gun and getting anything with a high interest rate. Pay off debt early. If you can, pay as much as you can towards it. So that way, at that point, you're kind of saving on that interest and utilizing that money for something else that you may need. Truth in lending statement is basically an institution has to give you, the rates and the terms of what you're signing. So most people don't read those, but I definitely highly recommend that you do. So that way you're not blindsided later on down the road. So you want to make sure you know exactly what you're signing before you sign. The don'ts of borrowing: no payday loans, no title loans, and don't carry credit card balances. So I know sometimes times can get hard, especially right now with the pandemic and everything. It's kind of hard to kind of have extra money, and with gas prices going up as well, it's also another factor into staying away from certain loans. But again, if you can help it, stay away from them. And then of course, with carrying balances, you want to make sure that you have, if anything, have multiple cards, so that way you don't max out your cards. So you want to make sure you use at least 30%. And if let's say you want to purchase something for $1,000, if the merchant can allow you to use multiple cards on that, then do it. Because at that point, it's going to help you when it comes to the utilization. It's going to help you with the payment, right? And again, only use what you have in your checking account, right? So then that way you don't have to worry about, the credit utilization. And if you have multiple cards and you spread them out, make sure you set up alerts. So that way you know which one is due, when it's due, and how much. So that way you don't miss any payments, because again, 35% of your score is, factored into that as well. All right, so that's pretty much all that we had as far as borrowing. But again, we do have a landing page for Pima students. You can definitely go to the website, and if you do open up an account, you get $100. Just make sure you have your ID with you. And then we'll basically make sure we have that in here for you. And then, of course, the other thing is we also have $50 bonus. So if you refer a friend, you could possibly get $150 just for doing that as well. But yeah, that is pretty much it. Thank you so much. I'll open it up for some questions, and then we'll go from there.
All right, so we have a few questions that came in through the chat. So if we don't have anybody that wants to unmute and ask their questions, then we'll go through the questions in the chat. Do we have anybody that has questions?
Yeah, so I was wondering, depending on your budget, do you get to pick how much you pay for every month, or do they have like a certain minimum or a certain amount?
On what? Is it, are we talking credit card? Are we talking loan?
Like student loans.
Student loans, I believe they do have a minimum on that. Again, I can divert that to the scholarship department there, because they're the experts in that. I don't want to mislead you, but I'm pretty sure they do. But again, this is my first stint at student loans. But the way I'm doing it is I'm being strategic about it, in the sense of, let's just say I'm taking one class at a time, and the class is 7 weeks, right? So what I'm doing is I'm getting, let's say $2,000 is what's going to cost me. I'm dividing that 2,000 within, in 7. So then each week I'm paying the designated amount, or at least putting it aside. So that way by the 7 weeks, I already have that money ready to go and just pay it off that way, with the flexibility that it allows.
Okay.
That's definitely a good strategy, Patrick. And just a little bit more on student loans or federal student loans. So student loans have various payment or repayment options. So a lot of them will depend on your income, or you could do it over a set period of time. So it'll be based on what is most convenient for you at the time that you start repayment. Repayment begins typically 6 months after you stop attending college at a minimum of 6 credit hours, or you withdraw, depending on where you're at. And so at that point, the Department of Education will start contacting you, and you can start making arrangements for repayment at the time. You do have the option, though, for example, with unsubsidized loans, to start making interest payments so that you don't accrue interest or accumulate that interest and then end up with like a larger loan to pay back. So you do have some options, and we're happy to answer any specific questions regarding student loans. You can always contact us. I'll put our chat our email on the chat, so you can contact financial aid and we can help you and walk you through the different student loan repayment options. Thank you for your question.
Just one more question. It's just for reference, like just because, so say you're like unemployed currently by the time you have to pay, how does that work? Like, does your parents end up having to pay for that, or?
For student loans, if you are unemployed, there are some options where through the Department of Education, you can get forbearance or an extension on paying back your student loans depending on your situation. Once you borrow a student loan, you are the person held responsible or accountable to pay those student loans back. So if someone is willing to help you, say your parents in this case, or anybody else with those payments, that's great, but you can always work with the Department of Education to see what options you have, because sometimes they're able to assist and extend payment or repayment for the period of time, especially in a situation of unemployment.
Okay, thank you.
You're welcome.
Okay, so one of the questions that came through the chat was, is it a bad thing to not have any history of loans or debt? Does that hurt my credit score or the ability to get a loan in the future?
So it doesn't, it's not bad per se, but if you're looking for certain loans, let's just say you're looking for a credit card and you don't have any history, as long as you have the income, most of the times you will get that credit card, right? But let's just say you want to purchase a car, right? If you don't have any history, that will still, help you with a cosigner. I'm sure they'll still be able to get you that car, right? So when you're looking to purchase a home, there's definitely some organizations there that will go ahead and approve you based off of your utilities, or your payments as far as what you pay, like utilities, your phone bill, whatever the case may be. So there's definitely certain organizations. So I don't know if you've heard of Dave Ramsey, but he also works with organizations that do help in that aspect if you don't have the history, right? But let's say you have bad credit, if you will, then at that point, it's a matter of making sure that we get you the right products to help you kind of, build or rebuild. Or if you don't have any history, there's still products out there as well that will help you, establish that credit. So for instance, it could be a secured credit card that would allow you to kind of, start learning a little bit about credit. And then of course, keeping in mind the utilization, making sure you're making payments on time. So that's for the secured card. The other alternative would be to be a cosigner, right? Not rather a cosigner, but an authorized user on a credit card. So if you have a parent that has a card, they can go ahead and put you on as an authorized user. That's going to help you establish and build your credit as well. However, the balance of the bill that's on there is strictly, the primary that's going to be responsible for it. So you want to be careful with that as well. But yeah, that's essentially what you'd want to do if you wanted to rebuild or establish. But yeah, to answer your question, it's not a bad thing if you don't have the history.
Thank you. Another question is, how long do you have to wait before you can refinance your home?
To refinance, that's a good question. I'd want to make sure I get the right answer for you. So basically, just shoot me an email, and I'll get with the mortgage loan officer so that way I can get you the right answer. But because again, with mortgage, I have to be careful what I say. So yeah, that's why I say that.
Thank you. Okay, so let's see. Another question is, what does it mean to buy too much house? How can I figure out how much house I can buy?
All right. So essentially, if you remember 2008, there was that crash. It's because a lot of people were getting homes even when they didn't have the income. So institutions were just giving you a loan, right? You don't have the income. Why are you getting a $300,000 home, or why are you getting $350,000? You don't have the income, right? So too much house for me would say, for instance, if I only make $50,000 a year, then I don't want to go in there and buy a $300,000 home, and I definitely don't want it to be no 15-year rate, 15-year mortgage, right? So stick to 30-year, and then maybe get a house for 150,000 or something like that, right? But don't go for a $300,000 home just to keep up with the Joneses. That's what I mean by too much home, because then at that point you're stuck paying for that, and Mr. Jones and Mrs. Jones moved away, so now you're just there, right?
Thank you. Me and my husband, we've been wanting to buy a home, and recently, like, the prices went up really, like, a lot, but we have two kids moving out, and I was like, we're going to wait until the kids move out, and then we'll buy a smaller home.
Yeah. So right now it's one of those things where it's like, should I buy or should I wait? But again, I don't think we're gonna have the crash like the way we think it would be, like 2008. It's not gonna be that. It will definitely self-correct, but it's definitely not gonna be the way it was then. So patience pays, but it's one of those things where yeah, just wait it out.
Well, we're at the point where we're like, well, we can save more and then put a larger down payment at the time too, when we do decide that on a smaller house.
Yeah. So at that point, then you're kind of looking at saving up for that down payment, putting down 20%, getting rid of PMI. But it's not all bad, because even if you only have the 3.5%, you can always accrue that equity in the home. Once you have enough equity, you can refinance, and then at that point, that PMI or the mortgage insurance is out of the door, right? So there's definitely several ways of doing it.
Thank you. Okay, so another question is, what is the best place to get a loan? Is there a difference between a bank or a credit union loans?
I'm glad you asked. But yeah, no, there's definitely a huge difference. So with the larger banks, and being that I've been in both sides, I worked for Chase and now with 1AZ, the interest rates are pretty much high. They're higher than credit unions. So you wouldn't go wrong if you went to a credit union. I'd hope you'd come to mine. But if you go to any credit union, you'd be able to get a lower interest rate. So for instance, just to give you an example, Citibank, with the credit cards that you get there, or loan, if you will, the interest rate will be high. If you wanted to get a balance transfer, they'll charge you a fee for the balance transfer, right? A percentage of that. Not only that, you're paying a higher interest. With the credit union, we're here to pretty much serve the community. So every business that we get, we go back and give back to the community in terms of low interest rates. So with our credit cards, we don't have a balance transfer fee. So that's out the door. The interest rate is way lower. Right now we have 1.99, if you will, on a credit card. That's pretty low. You're not going to find that at any large institution. And the other major difference is that you're a member, so your voice is heard. You get to vote on all the topics or subjects that come with the credit union. Whereas with a large institution like Chase, you're not going to vote unless you bought some stock or something like that. Then at that point you can vote.
Also, most credit unions offer scholarships. So if you're a member, you can apply for the scholarships. My daughter, we're part of a credit union. I'm sorry, Patrick, but not yours. But they offer a scholarship. So she was able to apply for that this year. So that's another benefit. Credit unions have a whole bunch of benefits, but that's one of them.
Definitely. You always want to have at least a credit union and a large institution hand in hand. That's what I always recommend. And if you have any other credit card, any other credit union, as long as, even if it's not mine, you're still in a good place because you definitely get some great perks there.
Okay, so we have a couple more questions. If I can avoid borrowing entirely, should I? Or are there reasons, benefits to take out a loan when I can pay in cash?
So just for the sake of, we live in a credit run world, right? At least here in the US, everything is credit, 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 right? So from personal experience, what I would like to do is rather than use cash and use my own money, I'd rather use somebody else's money and still, and still accomplish the same end goal, right? But the whole idea is being strategic and shopping around for the right terms, the right interest rate, if you will. So then that way, at that point, you're doing well by yourself, right? So should you avoid borrowing? It depends. It depends on circumstance, right? But for me, I'll use a credit card as long as I use it as a tool, not my daily expense, if you will. Then at that point, you're kind of building your score, right? You're pretty much putting yourself in a position to where if, let's just say you go and you're looking to purchase a house or a duplex or something, right? But being strategic is very important. So rather than going to buy or borrow, because you don't really need to, but you go and buy a house, why not buy a duplex or a triplex, right? Because then what you're going to do then is you're going to live in one unit and then you don't have to pay rent because the other two will pay your rent, right? So you're pretty much being strategic and smart about how you borrow rather than trying to avoid borrowing. It's how you use that debt that matters, right? Don't borrow more than you can afford. Just borrow just enough and be strategic, and then of course get that cash flow going. So that's basically the gist of it.
Thank you. Okay, so we have one more question. When getting a home or auto loan, do they tell you how much I qualify for, or do I tell them how much I want?
So essentially what you're going to do is you will put in a credit application. So whether you go to the dealership first or you go to the credit union, my credit union, we'll basically get the application going for you. And based off of that, we'll tell you, without any collateral, we'll tell you what you're able to pretty much afford based off of your income. And then, of course, your score being a huge factor in it as well. So with that, we'll tell you how much you're approved for, and then you take that approval and then you go to the dealership and then purchase your vehicle. Now, how much, that's entirely up to you, whether you want the shiny car or you want something that'll take you from point A to point B, that's entirely up to you. But the most important is your income and the credit score or credit worthiness, if you will.
Thank you. Those are all the questions that we got through the chat. If anybody has any more questions, I think we have 2 minutes, or we can jump into our activity. Carla? You're muted. It's just been one of those weeks, hasn't it? Thank you, Patrick.
Sorry about that, everyone. It has definitely been one of those weeks. 2 years into this, and I'm still doing the same thing. Some habits die hard, right? Well, thank you, Patrick, for the incredible information you shared. Borrowing is a very important topic. I know it impacts all of us, and it's good to know that there's strategic ways of borrowing. So thank you for sharing that information with us today. I do want to go ahead and take this opportunity and share a quick video with you all. So just bear with me just to summarize a little bit of what we talked about. One second here.
Borrowing money.
It's my favorite day today.
My birthday?
No, why would your birthday be my favorite day?
I don't know. Also, my birthday's not till June.
Guys, it's pizza day. My favorite day is pizza day, and pizza day is on today, and...
Huh? What's wrong?
I forgot my lunch money on pizza day.
I can help you with your predicament. I'll lend you the money.
All right.
All you have to do is pay me back later.
Cool.
With interest.
Okay, you will find I'm interested in lots of things, including pizza.
No. Interest is the extra money you pay, along with the money you borrowed. But isn't it worth it for a hot, cheesy slice? I'll lend you the $5 right now, and then you can pay me back, I don't know, $8 later.
That's $3 in interest.
That's how it works with loans and credit cards. You get to enjoy something right now and worry about paying for it later.
She has a point.
That makes sense for really huge purchases, like houses or vehicles or other things that you really need in your life. That way you can use those things while you're paying back the debt.
But you can't live in a pizza or drive one around.
Come on, what do you say?
No, I have $5 at home, but not $8. I do love pizza, but I can't afford this loan.
Fine. Suit yourself. Hey, aren't you allergic to gluten?
Wait, stop! We all chipped in and got you this.
Thanks, guys. You're the best.
Aw, don't worry. You can pay us back later.
We hope you enjoyed the video. All right, so now we get to do a pop quiz. I don't know if we told you there's a pop quiz and we're going to grade you. Okay, no, we're not going to grade you, but we do want to just maybe have some fun with, some fun with the information that we just learned. So if you could all take your device, whether it be, if you have a separate device that works to your phone, or on your the same computer that we're on, if you want to log into menti.com, menti.com, and use the code 53563045. You can go ahead and participate during our activity. So should I borrow or save is the name of our activity. So during this activity, we will review several scenarios and apply the knowledge that you just learned and to see if we should borrow or save. So let's get started. All right, and just for those of you, you can either scan the QR code on the screen, or again, it's just, I'll leave it on for a brief moment just to make sure you're all in. All right, anybody having any trouble? Chat us. Okay, all right, so we'll go ahead and start. All right, so would you save or borrow? If you're planning to go on a vacation and you know, you're all right, we have some folks answering already. So would you take out a student loan to go on vacation? Would you save your student loan funds just for your vacation? Or would you save your summer job money for your vacation? So, all right. And there's no right or wrong. It's just, you know, applying what you learned earlier from us. So, all right. So the most of you are planning to save your summer job money for your vacation. And that's a great way to plan for a vacation. You don't want to borrow typically for something like that you know in advance that you're planning ahead of time. So Patrick, do you want to add anything to that? You're muted. All right, so let's move on to the next one. Oh, go ahead.
Yeah, I got it now. But yeah, no, I put a little wrench in there and I answered save my student loan to see if anybody was gonna follow.
Oh, it was you.
Yeah.
Awesome, awesome. All right, next slide, next question. So your anniversary is coming up in 1 month and you want to surprise your loved one with an expensive anniversary dinner. Would you save or borrow? So all right, most people would save. That's great. Yeah, definitely. You know in advance. So hopefully you remember in advance. I know I've gotten in trouble sometimes. But so you definitely want to plan in advance, and that way it's not an expense that you put on your credit card, unless maybe you get rewards and like Patrick mentioned earlier, borrowing strategically, and then you can pay it back before interest hits your credit card or something along those lines. But definitely good choices. Let me scroll down a little bit. Borrow from my parents if I'm short. Yeah, definitely. If you have somebody you can hit up, definitely that's a good way to avoid interest. So good job. Good job. All right, next. All right, so here we go. How fashionable are you? Yeezys or Jordans? Would you save or would you borrow? So approximately those retro Air Jordans are about $1,600. And the Yeezys on the other side are about $350. But depending on your preference, either way, would you? All right, let's see. Would you save 20% of your monthly income to buy one of these, whichever, or both, maybe you like both. Save your holiday, birthday money, etc. Put it on your credit card because you have to have them. Or, you know, what are student loans for other than buying shoes? And my colleagues would kill me if they heard that from financial aid, by the way. But good job. Most everyone would prefer saving for something like this. And we do have somebody who's fashionable, so fashion before anything. Awesome. All right. So what if you're moving out on your own? What would you do? Would you buy a new bedroom set? Would you take your old bed with you? You know, that one that you've had since you were a toddler? Would you shop at a thrift store or borrow money to get new furniture? What would you do? Awesome. You know, it's funny, but that picture that you see on the background, you know, that's how a lot of us got started. Maybe I actually had a cardboard box for a table the first few months I moved out on my own, but you know what? I was proud of my little place. So, and then I saved up to buy me a table. So definitely, I think knowing when is a good time to borrow and being patient, like Patrick mentioned earlier, pays off sometimes. So definitely shopping at a thrift store is a good option too. You can find some amazing deals for next to nothing. So that's another option too. Or maybe, oh, go ahead.
No, I was just gonna say, yeah, that's usually how most people, we all start off. I got lucky because, you know, my mother was like, you know what, I'm gonna buy you the furniture. So,
Oh,
thank you, Mom. I know she's on the call, so thank you.
well, awesome. That's cool. I was going to say, or maybe hand-me-downs, you know, if your parents are maybe getting a new, I don't know, sofa set or something, and, you know, they're willing to give you their old set, that works too. So at least that's what happened to me. All right. Good job, everybody. Okay, so when planning to buy a car, what are some factors you need to consider to make a decision on whether to save or borrow? Please share your thoughts with us. total price. Definitely. You want to know what you're getting into, right? Again, kind of to Patrick's point earlier, how much house can you buy? It applies here too. How much car can you buy? Yep. How bad do you actually need it versus want it, right? That's great. Monthly income, the cost of the car, how high will the insurance be? That's also a great suggestion, because sometimes when you're buying a car, especially if it's your first time, you don't realize there's all these other additional expenses that are going to come with it, like gas money, insurance. If you're under a certain age, insurance is going to be a lot higher. So sometimes it's convenient to be under your parents' insurance. So those are definitely great things to consider. The interest rate that you're getting, definitely. The length of the loan, how long will you have to pay the loan back? Checking your budget, payments versus expenses. Can you afford the car? Definitely. How much should you always protect yourself? How much money should you still leave in your savings if you're planning to pay cash or something like that, or provide a considerable down payment for your car? Great. Wow. Definitely great points, everyone. Anything anybody wants to add?
I'll just say, if you're going to purchase a car, of course, that's a liability. So you want to make sure you get something that will take you from either point A to point B. That won't be too costly, right? And then save up as you're using that car. If you want something different, then you save up along the way. So then that way you're not buying too much car either, right? So the one thing that most people end up in is they end up getting a car that's too expensive. It's shiny, I know, but it's too expensive, and then you get repoed, right? So because you can't keep up with the payments, you get repoed, now your credit is messed up. So again, I've been there, so it's one of those things where you want to make sure you're making the right decisions for you and not outside influence.
That's exactly true. In a case like that, you would end up without a car and without the money that you've already paid into
And
it.
your credit, so you can go get another. So.
Exactly. Or if you do, you're going to get an incredible interest on that.
Go see Jack.
All right. So let's talk about college tuition. Should you save or borrow? Typically, the average cost of college tuition has increased about, 260% since 1980. That's quite a bit. So, sometimes you can thinking about college and what it means is you're actually investing in yourself. So it can be considered an investment more than just buying something, as some of the scenarios earlier. So definitely borrow if needed. Exactly. And only what you need if you can stick to that. Balancing both, absolutely. Other personal expenses, college. If you know in advance that you're planning to go to college, start saving if you can. Definitely save and borrow if you need to. Apply for scholarships. Look for multiple ways of financing your education, whether you're applying for federal student aid or scholarships, both internally from the college or university you're planning to attend, and external scholarships like Juanita mentioned. The credit union has great benefits for their clients. So do other employers. So just, check it out. But definitely great suggestions, everybody. Only borrow what you need. Start at a community college if you're planning to transfer. Starting at a community college, not only is the tuition much less expensive than a university, but all your credits are going to transfer to the university. So that in and of itself is a financial savings, but also there's a lot of benefits at a community college that can help you prepare and for your academic career as you transition to a university too. So great suggestions, everybody.
That's essentially the same path I went through. I didn't really know much about student loans. So I guess that was a thing guys. So I had to kind of like cash flow everything. And of course, mom was there helping it. And there were times where I went a whole semester and just stayed in the class and I couldn't pay. So I didn't get the, the credits. But, eventually, we made it through. So it's one of those things where if you can help it, just go to community college. Those will transfer over, and I can speak to that because I was actually able to transfer almost all of the credits over. So now I only need 11 classes of that. So, so just be strategic with that as well.
Definitely. That's great advice. All right. I think this will be our last question, but what are some options to get a pet? Let's say you definitely want a pet, you need that partner with you. So what would you agree to save some money, borrow money from a relative, or adopt a pet maybe if you don't have enough cash on hand? All right, great. So just a plug for our PAC Center. Right. Okay, well, thank you all for participating in our activity today. We appreciate it. So do we have any additional Q&As?
I didn't get any other questions in the chat, but I don't know if anybody else has any questions. They just didn't put them in the chat.
Okay. I'll stop sharing.
All right. If there are any other questions that comes to anyone's mind in these last few moments that we have before the event ends at 6 o'clock, feel free to throw them in chat. We can get them fielded accordingly. But otherwise, I'm going to take a moment to start my screen share again so we can announce our social media winners. So give me a moment here.
Pretend you all hear a drum roll.
I love it. The computer.
Well, you're getting that ready, Renee, we had a question come in. Is there a limit to how much money you can take out for a loan?
So yes, there is definitely a limit. Again, every institution is different, so they do have their own terms and guidelines on that. But most importantly, I do believe it has to do with your credit worthiness and, of course, your income as well. So that will determine how much they're willing to kind of lend to you. So if you, let's say, for instance, you make $25,000 a year, they're not going to give you $100,000 loan, right? So it all factors into that as well.
Thank you, Patrick.
Great questions. All right, let me get this up and going. All right, so again, we want to thank Patrick and everyone who's joined us today to help make tonight's event possible. And as a way of saying some immediate thanks and to show our appreciation to all of our participants, if you followed us on our social media accounts that we mentioned earlier for First Year Experience Program, which was at Pima FYE, as well as the Office of Financial Aid and Scholarships, which was what is shared in link right now. Sorry, I'm blanking on the handle for you all. We selected 2 lucky drawing winners. So congratulations goes to Sabrina Jordan and then Anhu Rivera. I apologize if I mispronounced either of those names, but you are our lucky drawing winners. So here on the screen, you can see the prize samplings that we will be mailing out to you. And so again, it's really important that you complete our feedback survey that we're going to be sharing the link to here in a moment so that you can provide us with your Pima A number and your mailing address so that we can make sure to get these prizes mailed off to you in the next few weeks. So virtual ASL round of applause and congratulations to those lucky winners. All right. And so again, as I mentioned, please go ahead and now take some time to follow the survey link that Juanita will be sharing with you all in our Zoom chat. And for those of you who maybe need to open up a new web browser and manually type it in, that link that you're going to be following is https://tinyurl.com/mmspring22. And so by completing this feedback survey, not only does it give us your input about what you liked about tonight's event, suggestions for improvement, but also it is going to be our cue that you are ready for us to email you that certificate of completion. And again, that will be coming from 1AZ Credit Union. And it's just a fun way to document that you attended tonight's event. And if you have any faculty or teachers who are offering extra credit for coming tonight, that is a way for you to document and verify that you were here. This will be our last session for for the spring semester, but the series will be returning in the fall semester. And so we will be sharing the schedule of topics, dates, and other details soon on our events webpage for financial aid, as well as in Pima Engage and all of our other social media links that we promoted tonight. Those links are shared with you in the Zoom chat. So if you're not already following those accounts, what are you waiting for? It's a great way to stay up to date with all of the different co-curricular activities and events and get engaged. Also, if there are any topics that you would like for us to present in future Money Matters events, please let us know in that post survey. You're also welcome to share those comments and feedback in chat if you want, but an easy way for us to collect all of that is in that post survey so that we can make sure that it is part of our curriculum that we share in the future to make sure that we are providing you all with the financial literacy information you need and desire. Again, completing that survey earns you that certificate of completion, but also it's going to be a way for us to document and verify that you attended all 3 of the Money Matters events. So if you were present for all 3 of our events this spring semester and you completed all 3 of those feedback surveys for each event, then you will be entered in a drawing for our $250 tuition award, which can be applied towards the tuition balance for your summer 2022 or fall 2022 balance. We will be recording that drawing here next week and sharing it out on our social media pages to announce the winner. We'll also follow up and contact that lucky winner through your Pima email account. So pay attention there. Good luck. Once more, a huge thank you to our partners at 1AZ Credit Union, as well as the Office of Financial Aid and Scholarships and First Year Experience Program at Pima. If you would like to follow up and contact any of us, our information is shared in the Zoom chat and is also on our web pages. And as Patrick mentioned earlier, we do have a landing page that promotes our partnership with 1AZ Credit Union, gives you some additional financial literacy videos and tools, and also shows you some benefits if you do choose to open up a savings account with them. Patrick, is there any more details that you want to share about that partnership or the benefits of starting an account?
Yeah, so just to reinforce that, so essentially we do have, aside from the $100 that you'd get for being a Pima student, we also have the refer a friend. So when you do open up an account and you refer a friend, you get $50, they get $50, and 10 people, 5 people, that's continuous. So you can definitely take advantage of that. Other than that, if there's any high schoolers, we also have another program for high school. You open up an account. Once you get your card, all you have to do is use it for about 5 times at any store, whatever the case may be. And you also get $50 just for being a student and actually taking advantage of that. So yeah, so we're doing the best we can to kind of, help the community and just give back, if you will. And this is one way of doing that.
Great. That landing page that Juanita shared in chat also will share with you 1AZ's credit union's contact information. So if you have any follow-up questions that weren't answered or addressed here during the event, or if you attended any of our past events, like a few weeks ago when we had the subject matter experts about investments, if you want to follow up with those folks, if you go to that partnership page with 1AZ Credit Union, you can find their contact information there as well. Also, when you complete that post survey, there will be a question that asks if you would like 1AZ Credit Union to reach out to you and follow up with you regarding any questions you may have or questions regarding your finances. And if you do, then and only then will we share your contact information with them. Otherwise, that looks like all of the information that we had to share. Again, here on the slide is an overview of all of the ways that you can follow up with us at Pima or 1AZ Credit Union. Juanita, are there any other questions that you collected in chat for us to address tonight?
I didn't get any more questions.
All right, great.
Thank you.
So again, feel free to take as much time as you need to finish up that survey. When it does arrive at 6 o'clock, the event will end and put everyone into the waiting room. But otherwise, we want to thank you all so much for joining us tonight. You are welcome to sign out at your convenience. And we wish you all a great rest of the semester. Keep striving, everyone.